So exercise 9 of our notes. Let's start. So when you get an answer sheet like this, you firstly go and you put in your formats. So if I have an income statement, the first thing that is really important and that you should know by now is that we only show the nominal section. All right? Nothing else. And you can actually see they already gave you the format. The important thing, credit side is income, debit side is expenses. What's the other thing I need to remember? Interest I show separate. So I'm going to take this and I'm going to quickly rewrite it. So I see I have sales, and I know sales is less debtors allowance. Then cost of sales, and then I see there's insurance, interest on fixed deposit. I know that's the interest income. Interest on overdraft. I know that's the interest expense. Please don't put it with operating. They make a difference between, they talk about operating income and expenses, and they say this is financing income and expenses. Okay. So, next one I see is water. Oh, where am I? Water and electricity. Did I miss that one? Water and electricity is 36 to 50. Please tell me if I'm having wrong amounts here. Bad debts, stationery, wages, rent, and advertising. And by just doing that, you already got your base marks. I also told you, if they ask you an income statement and a balance sheet with the same info, you somehow do them simultaneously. Okay. So if I look at the balance sheet, your format super duper important. Now, so fixed tangible assets, I know I'm going to take my note from the balance sheet, in other words, that carry value there, ne? I'm going to transfer it here. Okay. Financial assets, fixed deposit. Now, if I go look, I see they did give me a fixed deposit from Capita Bank, and they say it's 20,000. By the way, that 9,000 that they give me here is my interest rate per year. Okay. And they say PA, the A stands for per annum. And that's Latin for per year. Okay. So I've got my fixed deposit. Inventory, I'm going to wait because I know inventory, I'm going to look at my adjustments now. Trade and other receivables. What is my trade and other receivables? You should know it like this, ne? And if you can't see, I'm doing this. And that doesn't help. But you understand what I mean. So, for trade and other receivables, I need debtors control, prepaid expense, accrued income. Okay. So, let's go look. I have, now, very important, that prepaid expense and accrued income, if they do not give it to me here, ne? This should be then, if they give it to me here like I did in the test, you'll see it's not a pre-adjustment, it would be a post-adjustment, because I've already done it. Okay. But if they don't give it to me here, then it means I have to go look at the adjustments still. So let's go look. I have a debtors control. Okay. I see here I've got a bank. If it was an overdraft, in other words, if it was on the credit side, where would I put it then? I will put it here at the bottom with bank overdraft. Eh? Don't let me catch you like that. Next one, I see petty cash. That's cash. Oh, my papers are all around. That gives me 3,000, right? And then I see creditors control, which I know is a payable, 19,000. I also see they give me a loan. But the loan I'm going to wait. Because this is still a pre-adjustment, I can see, oh, there's still loan adjustments. So then I must know that that 80,000 is the opening balance less whatever I paid already on the loan. This isn't my closing balance. Let me prove it to you. Can you see it says here 80,000? And if I go here to loan repayments, can you look here at the loan? Can you see your closing balance isn't 80,000, it's 90. You see that? Now, if I say to you, that 80,000 at the top is the opening less what I pay. The opening is 103. What I paid is 23. So what does that give you? 80. So I just want to make sure that you understand if they give you information. If they give you information in the form of a loan statement, this is called a loan statement. Ne? So in a loan statement, they will actually give you an opening, what I paid, an interest, and a closing. Then I know that the balance that's in my trial balance is the opening less what I paid. But if they don't give it like this, if they only give me that sentence that says an amount of 10,000 will be repaid, then it means the loan statement is already taken into account, then that is my closing. You see the difference? Must I repeat? Yes. So if they give you a statement with opening, what you paid, interest, and a closing, then you know you need to use this closing less short-term loan. Okay? In other words, in this case, the 90 less the 10. If they don't give you that, in other words, they just give you an amount of 10,000 must be paid back next year, then you would take the 80,000 less 10. You would assume that's the closing because they didn't give you other info. What would happen if they give you info where they say that 80,000 and then they also tell you interest is so much? Okay, I see I'm confusing you. I'm going to go on because I'm now busy in grade 12 territory. So I'm going to stop. Yeah. I'm sorry. Sorry. Let's go on. Okay. So is everybody fine with what I said? Mfundo, are you sharp, my angel? Okay. So you are now on YouTube because I mentioned you on YouTube. So everything's filled in. I can start with the adjustments. So if I look at the first one, it says stock taking. Now the moment they say that, it means this is physical stock. This is what I counted, so this is the reality. Okay, and reality is always more true than just writing stuff down because I saw it. Okay, so now when I go look, I see there I've got trading stock 17,340. And if I look here, I've got 20, right? So what I will do is I will draw a little T for trading stock. I will say the one in the trial balance is 24, where is it? Now I lost it. 24,7, no, where is it? There. 17,340. And the one in the adjustment is 20. Now I ask myself, was there any other adjustments before I did the stock take that will influence my T account, like in the test where we return goods for 5. Okay? No, there was nothing like that. If there was something like that, like me donating goods, like a debtor returning goods, like we returning goods to a creditor, all of that has an influence on the stock T account. Okay? So then I would still do that entry here. Okay? But there's nothing. So what can I see? What I counted is more than my books. So meaning maybe a debtor returned goods, or maybe someone delivered goods that we bought but we never recorded it. Ne? So now let's go look. What is the difference? What's the difference? 2760. Now, huh? 2660. So now can you see it's on the plus side? And because it's on the plus side, it means that I need to find my income statement. Who stole my... Oh, here it is. I'm sorry. Okay, so can you see I'm going to have a trading stock surplus. And you're going to write for me. It's 20,000 less... What was that other one?
17340.
And it gives me
2660.
Okay. Sharp. Next one is stationery. Now remember again, stationery is divided into used and unused. In the income statement I show used. So if I read here that 200 Rand is the ones I count, meaning it's unused. So I'm going to take it out of the stationery because it's not used. So it means I only used 7590. Okay. This adjustment in the balance sheet will go just like that in inventory. So if I go to inventory, I'm going to say, oh, the stock I counted plus the consumables I counted gives me my inventory. You guys get it? Where did I get it? Here. This. Can you see it's literally this adjustment? What is what? Oh, okay, sorry. Sorry. 20,200. Is everybody with me? Okay, I didn't confuse you too much. Okay, now the next one. It says, the fixed deposit matures 31st March. Now what am I going to do? I'm going to go to the face. It matures. Whatever matures, I take out of the fixed deposit and I put in to cash. Can you see? That less 20 is going here.
Whatever.
So whenever they say it's going to mature next year, or in the next month, or in the next 7 months, you take it out of the fixed deposit, you put it into cash. They don't have to say the whole one matures. If they said 5,000 matures, you would have said less 5,000 plus 5,000, and then your fixed deposit would still be 15. Is everybody with me? Okay, so now my fixed deposit is 0.
So let's say they say it matures.
Difference. What's the difference between non-current and current? 12 months. Longer than 12 months, less than 12 months. Okay. Next one. Is everybody fine with that one? So already you're going to get 1 tick, 2 ticks, 3 ticks. 3 ticks. Okay. Insurance includes a premium for 12,000 that was paid for the period December to November. So your first thing that you see here is that this is 30 November, ne? And my year ends 28 February. So what do you see immediately? there's a prepaid expense. I've already paid for next year. So now let's calculate that. So if I go look, 12,000 was paid. Now if you count 1st December till 30 November, you get 12 months. Ne? So my known is 12 months. Okay? Now let's quickly think. If I draw a financial year, ne? And it starts 1st of March till 28th February, this insurance premium is 1st December, ne? Till 30 November. Can you see how many months is valid for this year? December, January, February, 3 months. So how many months is prepaid?
9,000.
9 months, ne? So I'm going to say 12,000 times 9 over 12, it's going to give me 9,000. So I know this is a prepaid expense. Prepaid expenses goes to the insurance. I'm going to subtract because future minus, right? And if I go to the balance sheet face, it's a receivable.